and shift focus to the money markets. The big event that all markets will wait is Governor Shaktikanta Das's second monetary policy. It's the first of this year. April policies are always important. There will be non-monetary announcements as well, probably on external benchmarks. But basically, the monetary policy itself could be a very big event. A. Prasanna, Chief Economist at ICICI Securities Primary Dealer, joins us. Good morning, Prasanna. Well, as always, the base expectation. And what is the base expectation of the market? What's priced in by your market?
Good morning. So what we expect is a 25 basis point cut in the repo rate, but the stance kept unchanged at neutral. I would think the market base expectation is also somewhat similar. Probably, I think there is some hope in the market that even if the stance is not changed, the commentary will be more dovish, or at least to give an indication that the committee might be open to more cuts down the line, depending on how the data evolves.
Okay, so the commentary could be dovish and 25 basis points is what you're looking at. Prasanna, hi, good morning. On the liquidity front, what would you expect to hear from the governor this time? Would we look at a change in stance away from neutral to surplus, and anything in terms of, more dollar swaps, OMOs, etc.?
Well, I think in the second half of last year, I think RBI has shown that they've been quite proactive in managing liquidity. So, keeping the stance at neutral. I think unprecedented amount of OMOs, and now they've started a new tool also. So my sense is that they will continue with the current stance, but assure the market that using a mix of tools that the RBI will be very proactive in managing liquidity. And typically in the first half of the year, and with the way RBI has managed it till now, in the first half of the year actually liquidity could turn surplus. Even on the basis of current stance. So I don't expect them to do anything more beyond what they're already doing.
Oh, okay. Actually, why don't you train our eyes to what we should look for in the speech and the statement?
Well, I think the first thing to look out for would be how the voting evolves. So, for example, even a 25 basis point cut with all the 6 members voting for it, I think would be taken very positively by the market. A second, of course, would be the projections. I mean, I don't expect any big changes in the CPI forecast. Probably this time they will give out the numbers for Q4 FY20, so it will be interesting to see how they see that, whether those numbers are also close to 4% or slightly above 4%. The bigger changes could come in the growth forecast, actually. I think both in terms of the GDP data and the high frequency data we have been getting, I think growth has been disappointing. Now, typically the RBI or the MPC, they've always been more optimistic about growth than the street. So we have to see what they do, whether there are bigger changes to those numbers. And probably that will also reflect, or that will also have a bearing on the kind of tone the policy statement takes.
So when you say that they could perhaps scale down their growth projections, what are you penciling in? And what's your own forecast?
Yeah, so our forecast for this year is 7.2%, and if I recall correctly, I think the previous statement, the MPC said 7.4%. That should be at the higher end of, I think, what most estimates are there on the street.
Actually, they confused us. They said first half will be 7.2 to 7.4, and third quarter they said 7.5. So I was not sure what to take. But yeah, maybe it would average out at 7.4, as you say. Prasanna, is there anything in the liquidity stance that we should look at? Do you think they may indicate that they will move from neutral to surplus liquidity?
Well, I think in the current monetary policy system where we have only a single rate, I actually don't understand what is the significance of moving towards surplus. I mean, obviously, when the deficit was there and when there was no visibility how the deficit will come down, probably it mattered to the market, and that the RBI has addressed by moving to a neutral stance and being proactive about it. With such a narrow corridor, I don't understand moving to a surplus situation, how it's going to help.
Okay. Then finally tell us how the market will react if there is a rate cut and accommodative stance, and if there is a 50 bips rate cut.
Well, obviously, with a 50 bips rate cut, obviously there will be a significant rally. But I would think that even if you have a 25 bips rate cut with an accommodative stance, we can easily see yields come down by 10 basis points at least on the 10-year benchmark. With the 50 bips, of course, the rally could be more.
Okay, Prasanna, we will let you go on that note. Thank you for joining us and giving us your expectations. We need to get back to the market. It's flat for now, but a couple of pockets are looking good, actually. Autos are not too bad. There's a bit of a pullback coming through in names like Maruti, Hero MotoCorp. In fact, consumption is doing well, not just autos. Something like a Titan is also up over 1%. But we'll continue our coverage on equities in a bit. For the moment, let's delve deeper into the commodity space. Manisha Gupta joins in for a roundup of all the action there. Hi, Manisha. Good morning. What's happening in the world of crude?
Good morning, Sonia. Thank you for that. We're a bit of a breather really coming your way when it comes to the crude oil prices. We haven't, it's a bit of a profit taking, but not too far away from the kind of highs that we have been trading at. And the declines really have come in after the EIA report from US reports that there is actually a 7.2 million barrels per day, million barrels of a surge in the US weekly inventories. What the markets were preparing was for a decline, but you have a huge surprise surge coming, and that's led to some profit taking. It wasn't coming anyways because we have seen one side steady move continuing in case of the crude oil prices. So while we did see almost a $70 and a 63 for the US crude as well, we have seen some decline come in right now. But the OPEC-led cuts and the US sanctions on Iran and Venezuela and overall supply decline in the developed market is continuing to support the crude oil prices. It also has to do with the US dollar decline versus the high-yielding currencies, EM currencies that has been supportive, and the US and China trade talks, which seem to be progressing quite on a concrete note right now. There also are statements from US saying that they want to set 2025 as target for China to meet all the trade obligations there. So with the timelines being set as well, that has been a positive influence on the metal prices also, where we have seen a third straight day of gains come in. So 0.25% to 0.5% of a strength is what we are seeing for all the metals on Shanghai and the LME exchange also.
Okay. Thank you very much for that, Manisha.